Seshagiri Rao, the Joint MD and Group CFO of JSW Steel, joins us now to talk about that. Mr. Rao, good morning. As we speak, iron ore prices globally have hit a new 5-year low. It's below that $80, and coking coal costs as well have fallen. How much of this fall in commodity prices will impact a company like JSW Steel?
Yeah, that is correct. That internationally the prices of both iron ore and coal have come down in the last few months. But in India, unfortunately, the same trend is not being shown in the prices of particularly the iron ore due to shortage of iron ore in India. So overall production side, iron ore in India in this year is expected to be lower, at least by 30 million tons. So due to which India has to import iron ore in this year. So to that extent of imports into India, I think JSW Steel stands to gain. We have planned initially that every month we import 0.5 million ton, that is 6 million ton in this year. After having seen severe shortages in India and unreasonable prices in the Indian market, we are now increasing our import of iron ore into India. We are increasing from 6 million ton to 10 million ton we are planning to do in this year.
Okay, Mr. Rao, good morning. Thanks for joining us. What does this mean for margins when global prices, both iron ore and I would assume end product prices also fall? Are you in a slightly unfortunate situation where imported product, landed prices are falling, but raw materials are not?
Maybe that is a blessing in disguise, because internationally prices are falling. Particularly port-based plant like our Dolvi unit, where it has to get iron ore from Orissa and Chhattisgarh. If they have to import iron ore today, I think imports are cheaper than getting iron ore from Orissa and Chhattisgarh at current prices. So therefore it is, in fact, it is a good situation where JSW Steel stand to gain by import of iron ore. Number two is quality is better, and we are importing high quality iron ore. So both together, I think it is beneficial for JSW Steel to get more imports.
Okay. Mr. Rao, just hold on for 1 second. There's a new listing in the market, and what a fabulous opening it's seen, Sharda Cropchem. I mean, we were expecting this. Varinder was telling us a while back about how the demand in the market has been huge, but look at that, 73% higher, now 272 for Sharda Cropchem, and even after listing at this 70% premium, the market cap will be what, about 2,400 crores, and it will trade at about 22 times on a historic level. So
yeah, actually, it's indicative of Sharda doing better than what the market expected, because Varinder has given us everything from 5% to a 70% premium. Obviously, he didn't expect a 75% premium. So it's better than the best expectations of the market, the listing. 74% premium as we speak. Okay, dilly-dallying between 73 and 74%. That's a fabulous listing. Well, it depends on whether you want to compare it with the UPLs of the world or the Rallises of the world, but you can even give it, as Varinder was pointing out, 28 times and take it even higher.
I mean, it's a good company.
Listing,
it's a good company. It hasn't seen any losses ever since, for the last many years. Trades at a margin of, does a margin of about 20% or so. So good quality companies get a good opening.
And it is still 20 times. I mean, it's not obscene valuations. So now a bit of a correction, up 68%. We will speak to the management in a little bit. Mr. Rao, therefore, sorry, you were saying therefore that you expect margins to be higher this quarter?
I'm not saying margins are higher or lower, because as I mentioned to you, the port-based steel plants in India, one of our units like Dolvi is a port-based plant. So if we import at the current prices, it is almost equal or slightly lower relative to what we otherwise get from Orissa or Chhattisgarh.
Okay. Just one question on what volumes you will be able to do. You did mention the last time that by the end of this fiscal, you will do volumes of about 12.4 million tons. Do you still stand with that forecast?
12.9 million ton we have given the guidance for production, and 12.4 million ton for sales. We will be able to achieve these targets.
Okay. You have a brownfield expansion at Dolvi. You are including that, or when does that entire expansion help you?
Brownfield expansions we are planning to commission only in September 2015.
Okay.
So these targets which we have given in this year is without considering the brownfield, which anyhow get commissioned only in the next year.
Okay. You did mention that you import about 500,000 tons of iron ore per month for the, to counter the temporary shortage in Karnataka. But what is the status as far as the Supreme Court's approval for the Karnataka government's request to increase the production limit? Has there been any relief on that front? And if that comes through, will you have to import less?
Yeah, if iron ore production improves in Karnataka, yes, we can import less in Karnataka. But today what is happening is when Supreme Court directed to get additional 3 million ton into the market by permitting MML to produce additional production in the state of Karnataka, 2 more big mines got closed. So with that, the 18 million ton production which we are expecting in this year, 3 million ton is out and 3 million ton is coming in. So overall I am not seeing a big improvement in the production of iron ore in Karnataka state.
Okay, actually, Mr. Rao, we called you for the bid that you will have put in for that Lucchini plant. Can you tell us more? What is the cost? What are the chances of you getting it? How will that change the P&L?
No, we have been following a strategy of forward integration and backward integration wherever assets are available. We have been scanning those opportunities. So Lucchini is one of that. Where we have billets in India, we will be able to send these billets and convert into finished products, either rails or bars or rods or wire rods, and sell in the market. They have already a customer base. So with that, this particular target fits within our strategy which we have been following for over years. So we have submitted our binding bid. We are yet to hear from them. So we will be able to share more information once we get the confirmation about acceptance of the bid. But as on date, which we can share with you, that the investment is not very big in this particular asset, but it is only a forward integration. It is not taking over the entire integrated plant. So we are looking at only finishing mills, which we will be taking over if the bid is accepted.
What is the capacity only of the finishing mill?
It is total together 1.3 million tons total, all the 3 mills together, rail mill, wire rod mill and the bar mill.
Okay. And are you likely to get it at fairly attractive valuations because Severstal and its later owners are in trouble? Is this more like a slump sale, so you're going to make a fairly decent bargain?
Yeah, if it is not attractive valuation to JSW Steel, I don't think we will do it. So it should make sense for us, it should fit in within our strategy, it should be within our valuation range. Then only I think we will go ahead. So accordingly we submitted our bid. So we are expecting that the response will come in the next few weeks. So once we receive a final acceptance from them, then I think I will be able to share more information about other details.